So he made an expenditure of rupees 40,000. When the goods goes to Bangalore, expenses made by the consignee is 20,000. His commission is 30,000. 1,000 cycle, 100 cycles accident 900. How many cycles is not sold? 100. How many cycles sold is 800. So this is unsold. This is called non-recurring. This is called recurring expenditure 60,000. Both are the expenditure made by consignee. Hello my dear students, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Year College, a Temple of Excellence, MYSURU. In this session, I am going to have Advanced Financial Accounting, second semester, Unit 4, Session 3, in favor of Accounting for Consignment Transaction. What's that ready? I will repeat. Accounting for consignment transaction. I told in the last class, consignment is an agreement between the two parties. One is called the consignor, another is called the consignee. Consignor is the owner, consignee is the agent. Whatever the agreement that takes place between the consignor and the consignee, we call as consignment. Consignor gets the profit, consignee gets the commission. It's a procedure. 1,000 bicycles were consigned by Guru Cycle Board of Mysore. He is the consignor to Madura. Who is the consignee? So who is sending? 1,000 bicycles were consigned by Guru Cycle Mart of Mysore to Madura traders at an invoice cost of rupees 2,000 each. Guru Cycle Mart paid freight rupees 20,000 and insurance rupees 10,000. During the voyage, 100 bicycles were totally damaged by accident and had to be thrown overboard. Madura traders took the delivery of the remaining bicycle and paid rupees 36,000 for custom duty. Madura traders sent a bank draft to Guru Cycle Mart for rupees 5 lakh as advance payment and later sent an account sale showing that 800 bicycles sold at rupees 2,800 each. Expense incurred by Madura traders on showroom rent, advertisement amounted to rupees 60,000. Madura traders is entitled to a commission of 5% on sale. So this is a problem. Generally, how it will goes now? First now, when you prepare now, an example, a small example. First, goods sent on consignment. This is the consignor to consignee, generally. An example. Who is sending the goods? Consignor to consignee. Assume that it is 1 lakh. Then, in order to send the goods from one place to another place, the consignor has to meet the expenditure. To bank account, expenses of consignor. Assume it is about 40,000. This is the expenditure made by consignor. What's the value of the goods sent? 1 lakh. What is the expenses made by the consignor? 40,000. To consignee account, expenses. This is expenses made by consignee, about 20,000. To consignee account, commission, about 30,000. Assumption, just as an assumption. What is the cost of the goods sent? 1 lakh. What is the expense of the consignor? 40,000. What is the expense of consignee? 20,000. Met by the consignor. How much commission is payable? 30,000. Here, by consignee account, in the bracket sales, assume 3 lakh. By closing stock, unsold stock, about 60,000. It is 3,60,000. 3,60,000. Deduct now 3,60,000. 360 followed by 30 minus 1 lakh minus 40,000 minus 20,000 minus 30,000. 1,70,000. Difference is 1,70,000. To profit and loss. Simple example. So he sends an example. He sends the goods to be 1 lakh. The expense of the consignor is 40,000 sending the goods from one place to another place. Then assume that consignor is in Mysuru. This is consignor place. Consignee is in Bangalore. Consignor place. Consignee place. Who is sending? Consignor from Mysore to Bangalore. So he made an expenditure of rupees 40,000. When the goods goes to Bangalore, expenses made by the consignee is 20,000. His commission is 30,000. He makes the sale for rupees 3 lakh. And unsold stock value 60. There is a difference of 1,70,000. This goes in favor of the consignor. This goes in favor of the consignee. So commission goes to consignee, profit goes to consignor. Now, so this is a very simple example I have given. So this is simple example taking as the lightning. So on the base of this, our problem is going to be solved now. 1,000 bicycles were gone. How many goods were damaged here? Come back here. Valuation of goods. Just write by each time. So 100 bicycles were damaged. Each bicycle cost how much? 2,000 worth of rupees 2 lakh. Add proportionate non-recurring expenses. Non-recurring expenses are means advertisement, selling expenses, general expenses. All these are non-recurring expenses which are incurred. I have given octroi, carriage, insurance on transit, all things. In the last session I have told you only non-recurring expenses should be taken. 30,000 for how many vehicle? 1,000 vehicle. We want for 100 is 3,000. Add proportionate non-recurring expenses of the consignee. There is no non-recurring expense of the consignee. So the value is 2,03,000. Then treatment of abnormal loss. First, the value of the goods lost abnormally 2,03,000 is debited to accidental loss account and credited to consignment account. Then, secondly, the amount of abnormal loss not covered by the insurance company. There is no amount is received from the insurance, debited to profit and loss account and credited to accidental loss account. This point should be bear in mind. Now, value of the closing stock. Cost of 100 bicycle in stock. 100 into 2,000 is 2 lakh rupees. Here, if you see that, you understand all these things. So, out of 1,000, 100 cycles were made. How much goes to the consignee? Only 900. Out of the 900, no. Here, come back here. Madura traders sent back the bank draft. No, 37 Madura traders took the delivery of the remaining bicycle and paid 37. Madura title here. Advance amount rupees 60. Madura trader is entitled to commission of 5% on sale. So, insurance company during the voyage, 100 bicycles were totally damaged by the accident and to be thrown out. Madura trader took the delivery of the remaining bicycle and paid rupees 30,000 for custom duty. Madura trader sent a bank draft is an advance as advance payment. Later, the account sale showing 800 bicycles were sold. So, you have sent how many cycles? 100 cycles. This is totally 1,000 cycles were sent. 100 cycles met with accident. What's the balance? 900. Another 100 cycles. Here is only not sold, 800 cycles sold. So 1000 cycle, 100 cycles accident, 900. How many cycles is not sold? 100. How many cycles sold is 800. So this is unsold. For this, we are going to value the stock. Valuation goods destroyed, abnormal value of the closing stock, cost of 100 bicycle at rupees 2000 is 2 lakh, and proportionate non-recurring expenses comes to 3000. Add proportionate non-recurring expense of the consignee, 36,000 divided by only 900 reaches now. He spent 36,000 for how many cycle? 900. You want for 100. It will come to 4,000. Totally 2 lakh 7,000 is the value of the closing stock. Now, in the books of cycle, Guru cycle consignor, consignment account, he will send the goods. Goods sent on consignment. How many vehicles he is sending? 1,000. Each vehicle costs 2,000. It becomes 20 lakh. So 6 followed. Then expenditure of the consignor, totally 30,000. Expenditure of the consignee, 36,000. And further expenditure also 60,000. This is a non-recurring expenditure, showroom and rent and advertisement. He make the sale for 22 lakh 40,000 and gets the commission of 1 lakh 12,000. There was an accidental loss of 2 lakh 3,000. Closing stock is 2 lakh 7,000. Totally 26 lakh 50,000. This is 22, 24, 26 lakh 47, 50,000. There is a difference of 4 lakh 12,000 is a profit that goes in favor of the consignor. What's the value of the goods sent? 20 lakh. Expense of the consignor 30,000. Expense of the consignee directly 36,000. Indirect expenditure, this is called non-recurring, this is called recurring expenditure 60,000. Both are the expenditure made by consignee. Then he made a sale for 22 lakh 40,000. Then there was an accidental loss of 2 lakh 3,000. So there is unsold goods to the value of 100, valued rupees 2 lakh 7,000. Mudra traders, consignee account, consignment account, in the bracket this is sales. The entire sale lies with the consignee, 22 lakh 40,000. He will deduct his advance out of the sale. He will deduct his advance. He will deduct his non-recurring expenses. He will recover with the recurring expenses. Then he will deduct his commission. Whatever the difference comes, the difference will be sent by consignee to consignor in the form of a check. This is nothing but an account sale. So when the sales is made, amount lies with whom? Consignee. Out of the amount, he will deduct his advance, he will deduct his custom duty, he will deduct his rent and advertisement, he will deduct his commission. Whatever the difference comes, that will be sent by consignee to consignor. Accidental loss, totally loss. Consignment value of the goods loss, 2 lakh 3,000, which has been transferred to P&L account. Abnormal loss transfer, 2 lakh 3,000. No money has been recovered from the insurance company. The entire amount is a loss to the consignor is considered. Now, goods sent on consignment. What's the value of the goods sent on consignment? 20 lakh. So same will be entered into trading account. Entire amount enter into trading account. So hope you understand. This is a problem without invoice, only cost price. We say that. So this is an expenditure. Whatever the expenditure comes now, I have given example also. Then I show you how to calculate the accidental loss. Only non-recurring expenses. When you go with the accidental loss, only consignor expenditure should be taken because it is not reached to the consignee. While valuing the closing stock, we take the expenditure of the consignor, we take the expenditure of the consignee also because it lies with the consignee. But in the accidental loss, it not reached to the consignee. Only the consignor expenditure will be taken into consideration. That is the most important point. I have done a problem on this. And also I have explained the last session about the format and I have given one example also. Hope you understand. We'll meet in the next session with another problem. Till then, goodbye. Meet in the next session.